This is Immigrant Podcast with Robinson.
Hello, everybody, and welcome back to the Immigrant Podcast with Robinson. Right now, face to face on camera for the first time, and I'm here with Gurwinder Singh Shekhon, who got here when he was just a kid from Punjab, and now he's also a chartered professional accountant, CPA. And we're going to learn a little bit more about him. So welcome to the show.
Thank you, Robinson. Thank you very much for having me. And hi to all the audience. I've been watching your podcast for a long time, and they're very, very educative. Serious.
Thank you very much. Thank you very much. So let's find out a little bit more about you.
Yeah, sure. So my name, as Mr. Robinson said, is I'm supposed to look there? Or?
It's okay. We can just go.
My name, like you said, is Gurwinder Singh Shekhon. I came to Canada when I was pretty young. So I did my high schooling here.
Okay.
So I did all levels of French to obtain my high school diploma. Then I went to Vaudreuil College, actually, which is English CJEP. I did it's called DEC in Computer Science Technology. So after that, 9/11 happened, kind of,
Wow.
Okay, so the market was a bit down for all the IT people. So I was looking for work. I couldn't find the work of my choice. So I waited a couple of years, 2-3 years, and then I decided to go into accounting because from the very beginning, I was very good in mathematics. Okay. And the numbers were appealing me, and all my house relatives, everybody was saying like, you look like an accountant. You should be you're good with numbers, so why not? So I wanted to give it a try. And my dream was to serve my community here.
Very good.
Because they were misled by some bookkeepers or accountants who do not have real knowledge of the numbers or real knowledge of, let's say, taxation. And people just go to them blindly and they are misled. For example, they don't know, they just buy the software and they don't know what is behind the software, the numbers, So I wanted to guide my community in the right way so that they can get good knowledge. And because people these days, they just want to save taxes.
That's true.
Like, this is the irony of our society, but they have to know that you can save taxes, but do it in a legal way.
That's right.
So I did my BCom in accountancy. Then I waited another 1 or 2 years due to some personal reasons. Then I decided to do chartered accountancy. I saw that there is more future and more I can learn. And when you're a CPA, that time there were 3 organizations: CA, CGA, CMA. It was in 2011. Okay. So by the time I did my CPA, I was the only Punjabi who had the name Singh who passed from Quebec. So I was the only one graduated.
That made you very special.
Right, yeah. So I was happy to see my name. I attempted and I passed in first shot.
And we have to say that Singh is a very famous name in Punjab, right?
Right. So everybody has to have this name, and this is another story. Like, this is like our middle name, let's say. This is given to us by our gurus.
Okay.
So I passed my CA exam, and then you have to have 2 years of training in a CA training office to obtain your CA designation.
Perfect.
Okay. Until that, you cannot put behind your name CA. So this was the last year when CA, CGA, CMA was existing, and the name of the exam was UFE. UFE. So after that, when I graduated, CPA came into play. So CPA is like an umbrella where CA, CGA, CMA was existing, all of them.
Instead of them, each one separate,
Each one was separate.
Together under CPA.
Yes. So then they decided CPA organization, we will make, let's not confuse people, let's make only one organization called CPA.
Okay.
And then exam also changed from UFE to CFE.
Right.
So now there is only one exam, but what they let us do is we could carry the name CPA, CA for next 10 years after 2012, so that the people, they know that this person became CPA after passing his CA exam. So he's not a CGA or a CMA, he's a chartered accountant, professional chartered accountant. So after that, I finished my training and I got my CPA designation. I did a couple of years of work. I worked at Ernst & Young, one of the big four companies.
I've heard about them.
Yeah,
Yes.
this is where I started. Then I worked at a small firm because I saw that in bigger firms you cannot learn a lot. You know,
You learned
I
specific
wanted to
things.
learn specific things, and I think small to medium-sized firms, they teach you a lot. You know, you hear the manager screaming at,
Sure.
employees. You hear them talking to the clients and all that. So I was more into clients, because I had to serve the clients. So I learned a lot while working in a medium-sized firm afterwards. Then I decided to open my own office. When I saw that I'm capable, so I opened this Satgur Accounting Services CPA in 2014, in the end of 2014 almost, so it was September. So now it's almost will be 10 years.
10 years.
10 years, yeah. But before that, I was also working from home. It was not a corporation, but I was working as a registered a business. Before becoming a CPA, I started to work as an income tax preparer since 2007 when I was in school. So
About 16 years now.
Yes.
17 years.
Right. So I learned taxation from my Concordia University, where I did my BCom, and I opened small business. So I had a couple of clients, so which was giving me more confidence to how to speak to people, how to help them, how to understand their needs.
Right.
This is very, very important.
So you learned by doing.
By doing, yes. I opened
the best way.
Right. So I opened. I was working from home that time. I had one room which was just office to see clients. But then I saw that most of the clients, they don't want to come to your home. They don't feel comfortable, and they don't feel that this person is of that level.
Correct.
So then I came to this office. We got this office, and now it's a huge office. I started with 1 or 2 rooms, and now we have 1,500 square feet of office.
And you've been in this office for 10 years?
10 years now, yeah. And we have 5 to 6 cubicles on the backside. 3 people can sit here, and we're growing. Trying to help people.
That means that you've been doing a great job in this past 10 years.
The thing is, we have to serve clients.
Right.
If they receive good service, then it's like word of mouth. They will bring more people.
That's true.
But our job here is not on quantity right now. We're focusing more on quality. Quantity will come with time.
That's true.
So we're focusing more on quality.
That's it. Awesome. So let's get our hands dirty.
Sure.
And let's get into taxes. Tax season is very close to us. Usually people start filing their taxes in March, even though they could do it earlier if they have all the data that they need. But who has to file taxes in Canada?
First of all, I will start with income taxes. We already started to receive emails. People are very eager to file their taxes right now. We are in January, and they want to file ASAP. So they have to understand there is certain deadlines by government, by
Right.
CRA, Canada Revenue Agency, and Revenue Quebec. So this year we can only start filing taxes online, electronically, after February 19. So before that, they will not even accept it.
Okay.
So I will suggest everyone should, we will talk about that, what they should gather documents and everything. Who should file taxes is basically who is a resident of Canada. So every resident of Canada has to file taxes. And residency is dependent on various factors. Major one is their residential ties. If they have any residential ties, major residential ties, if you own a property here in Canada, if you have a house, if you have a spouse, if you have a dependent child, then you're a resident of Canada and you have to file your taxes here.
Even if you don't live here in Canada?
That is called non-resident.
Okay.
So if the case goes to the court, first factor they look at is residential ties. These are the primary residential ties. Having a property here, you're living here, your spouse or dependent is here.
Okay.
Then they look at secondary ties, which are if you have a bank account here, if you have a driver license from Canada, if you have a medical card from here. But if you can prove that, no, you are not living in Canada, okay, but your spouse is living here and you're supporting her, then you have to declare your world income to Canadian government.
Okay. The world income.
World income, yes. But with most of the countries, we have tax treaties so that you are not paying double taxation. for example, USA, because they already deducted their taxes there. So you do not end up paying double taxation.
Okay.
And yeah, basically that's it. And,
So when you say a resident, because outside of what you mentioned, then we also need to understand that that would cover citizens, residents,
Yeah.
students, refugees.
Right.
All those would have to file.
all of
an
them with a
income tax.
valid social insurance number, they have to file their taxes. For example, refugees, let's say.
Do they have a social insurance number?
Refugees, for example, when they come to this country, Canada, they receive social insurance number, and their social insurance number starts with the digit 9, number 9.
Got it.
So we already know that they are refugees or they're not permanent residents yet. As soon as they become permanent residents, their social insurance number changes, and they have to inform us because otherwise we cannot file their taxes electronically.
Okay.
And students, yes, students have to file their taxes too. Most of the students are working part-time and they are also going to school. So to get their tuition credits, because when they go to school, they pay big amount.
Yeah,
International
huge.
fees are huge. So they receive T2200 form from CRA and RL8 from Revenue Quebec. So they have to declare both tuition forms in order to get the tuition credits so that they can use them. For example, if there is a 10,000 fees they paid, okay, they will not receive the credit right away. They will receive when they work more. So for example, let's say they made $40,000 next year income, and they were supposed to pay $3,000 in taxes to the government. But these tuition credits not only help them to avoid these 3,000, but it can get them a refund too.
Which is good.
Yes, that's why you have to keep all your data in order, everything to get all the credits possible.
Awesome. And how do people prepare throughout the year, these 12 months before they file taxes, so that they either pay the right amount or they try to pay maybe less? How do we get ready? And before we started recording the interview, I was asking you that if you have a job, you could actually go to HR,
Right.
and if you know exactly what to ask, you can ask them to deduct more or less so that at the end of the year is basically zero. Neither the government gives you money or you don't have to pay them any money.
Paying them, yes.
So how do you get ready?
Actually, when the new year comes, okay, me and my firm, usually we plan for the incoming season, which starts end of February. We send them a general email to all our clients.
Okay.
So I can show you a picture of one of the emails that I sent this year. Before the taxation, I sent them with the New Year card. I send them like Happy New Year, everything. And then I gave them the new changes, which will be this year.
Excellent.
So we're looking forward to continue working hard with you, all of you. And these are some of the changes in 2024, which we can discuss later on. And then we tell them how you can prepare so that they don't waste their time, they don't waste our time, so that everything is organized, so they can organize all their T4 slips. First of all, they have to gather all documents. Wherever they worked, they have to arrange the documents from their employer first. For example, if they worked at a firm and they were an employee, so their employer should give them T4 slip.
Right.
If they were a commission employee or someone who was working on commissions, let's say, they will give them T4A maybe, like Uber drivers, let's say, or pizza delivery people, all that. Sometimes they just give them a piece of paper saying, okay, this was your income this year. So make sure, take this paper to your accountant, because even if you were a pizza delivery guy, you were receiving some cash and you were depositing it somewhere.
Yes.
So CRA can verify the income. Then you can sort all your information by time, organize all your receipts, all your expenses, major expenses like donations. Even if you made a small donation, it can help you get some credit. Then all your medical bills, which are prescribed by the doctor, all your dental receipts, let's say, for your daycare, for your children. If the children are going to daycare, get the RL24 slip from your daycare center.
Right.
And if they were going to private daycare or some lady was taking care of someone, get some paper from them.
Or you can also get something.
Yes.
Is tithing considered to be a donation?
Sorry?
Tithing.
Tithing is not a donation.
Okay.
Yeah, tithing. And also main thing that they should keep in mind is don't rush. first, when your papers are organized, look at the deadlines. When is my deadline? Go for the deadlines. For example, RRSP contributions, which many people take and they really help them save their taxes. So RRSP contribution this year is February 29th, 2024. Because it's a leap year, so we have 29, one extra day in February.
So by February 29th, any
Yes.
contribution towards the RSP
RSP.
needs to be already
Right, so
in.
it will count towards your 2023 taxes.
And what happens, let's say you put that money right on the 29th. How do you get that document that validates that that money was put in and it's going to be considered for last
Right.
year?
Usually this document will be sent by your bank or your representative in mid-March maybe.
Okay.
But if you're in a rush and you have to file your taxes for certain reasons, like for visa issues or some immigration, or you're buying a new house, then you can tell your accountant that with the receipt that this is $10,000 that I put on February 29. I'm just waiting for the document.
Okay.
So just give your amount and the institution where you put this. For example, could be a bank or could be certain private lenders like say IEA, for example, Industrial Alliance,
Right.
and your accountant can help you file the taxes. And looking at the deadlines, deadline to file taxes is usually always end of April. If it's a Saturday or Sunday, then it falls next Monday, which could be May 1st.
Okay.
But this year, April 30 is the deadline for personal taxation. And for self-employees, for example, who has rental income, you or your spouse, either could be, if one of them is self-employed, the other one is considered for the tax deadline, is same deadline for both. So July 15th is the deadline for self-employed people. But if they think they owe money, which most of the self-employees owe, then you have to pay your income tax by April 30, but you can file it by July 15th.
Okay.
Sorry, June 15th, not July 15th. June 15, 2024 is the deadline to file taxes for self-employed people.
Okay. Very good. And what kind of income needs to be reported?
This is a very common question that we receive from each year from everyone, and my answer is always same: all types of income.
All types of
You
income.
should declare your employment income. It includes your emergency service volunteers, or could be security commissions, your other employment income, income from your rental property, let's say. It could be income from research grants. It could be income from, let's say, royalties. Then if you are a 65 plus and you're receiving pension, it could be your old age security pension that has to be declared too. Government always send the T4A OAS form at the end of the year. Any income that is like CPP benefits or something has to be declared. Only income which is exempt is any money that you win from casino or lottery winnings, or if any gift you received.
Like a windfall, like heritage?
Right.
Okay.
Inheritance is not taxable in Canada. So this is the only kind of income which is exempt, and all other kinds of income has to be declared.
They have to be reported.
Yes.
Okay. Very good. And we talked about the deadlines of when we have to file our taxes.
Right.
But if we do not file our taxes within that time frame, what are the penalties?
It's always recommended to file your taxes on time, but sometimes situations are not in your control and you're late.
Right.
Let's talk about what you can lose or what can be delayed if you don't file your taxes on time.
That's important.
Penalties and interest will be there if you owe money to the government, for sure. And if you are receiving money, then there is no penalty or interest. I have seen people who are filing taxes for 10 years together with us. Because in
10 years
10 years.
together?
Yes, we always file. Each year we have a couple of people who are bringing 5 to 10 years of taxes they haven't filed. Now when CRA or Revenue Quebec is sending them final warnings, then they bring all their taxes together. So,
wow, that's amazing.
right. So April 30, like for example, if you don't file your taxes by April 30, if you are an employee, and don't file your taxes by June 15th, if you are a self-employed, you can lose some benefits. For example, if your income, let's say, is generally below 56,000, then you can lose your GST refund if you're a couple.
If you have
Yes.
GST.
You will not lose it, but it will be delayed.
Okay.
Then your other benefits, for example, child benefits, that could be delayed. Then your pension could be delayed, Then your solidarity tax credit, which Revenue Quebec gives for housing, it could be delayed. So certain benefits you can even end up losing them.
Wow.
Yeah.
During that year or forever?
During that year.
Okay.
Yeah, during that. So it's better to file on time so that you receive all your benefits on time.
That's good. That's good. Something very important.
Yes.
How to reduce the amount of taxes that we pay. Legally, huh?
Legally, you can reduce your taxes by giving all your deductions. For example, all your, let's say, one is called tax credit, one is tax deduction. Which deductions are available for me? People usually ask. I always say like major ones are like I already spoke about is childcare expenses that you paid. It could be your disability or something that you paid to your doctors or medical bills, donations. And the major contribution that people are doing these days to reduce is RRSP.
RRSP? Okay.
Yeah, so like we said, deadline is February 29th and everybody knows what is RRSP, but make sure do not over contribute to your RRSP, otherwise you will have penalty. It's a 2%. And how do you calculate your RRSP limit? Just look at your notice of assessment from last year. It's written how much contribution you can make, and how the contribution is for the next year is the contribution of last year plus whatever is the lesser amount of either 18% of your earned income. For example, let's say you made $100,000 of salary, it will be 18,000 your limit.
Correct.
Or the maximum limit which is allowed. And for 2023, maximum limit was $30,780. So what is lesser of 18,000 and 30,780? 18,000.
18,000.
So you can contribute 18,000 plus the previous year.
Plus whatever the notice of assessment says.
Says from previous year, yes. And it leads to another benefit, which is home buyers plan. We can speak about, why RRSP is good. RRSP is good for the first time home buyers, So whatever, like for example, if you're going to buy a first house, you and your spouse can withdraw 35,000 each, which is
each,
yes,
okay.
Which is like $70,000 from your RRSP account without paying any taxes, and put this as a down payment towards your first house. This will not be counted as an income, but this amount that you took out for your home buyer, you have to put this amount back into RRSP after 2 years.
After 2 years?
Yes, after 2 years, you have to start putting this money back, but not.
Oh, you have to start and then you have 15 years.
Right.
I was like, you have to pay 35,000 in 2 years.
So you have 15 years, like you said. So let's say
zero interest.
Zero interest.
Wow,
yes.
That's good.
So if you don't put this money back, that portion of the income will be added to your income.
The 35.
Not 35. 35 divided by 15.
Okay.
Yeah.
So
this portion
for 15 years, if you don't.
Yeah.
So like if I don't start paying in the second year.
Yeah.
Every year for 15 years, they're going to add this 35,000 divided by 15 to my income.
Right. Which is
not
about
that much.
2,000 something. Yes.
It's not that much.
Right. It's not that much. Yes.
Depending on how much money you're making.
Right. Depending on your income.
That's good. Okay. Yes. That's interesting. And how about courses, education? Is that something we can use?
Yes, like I said, for
well?
all the students, for example, they can bring their T2200 forms, make sure to contact your financial institution. Most of the schools, they upload in their financial section, like when you log into your account, you can download your tax documents there. Or let's say, for example, nurses, let's say, or engineers, or CPAs like me, we pay certain amount each year to our financial institution, like an organization, and those are also deductible.
Okay.
Yeah. For example, if you paid $600-700 a year, this is also a valid deduction, like donations and all that.
Very good.
Yeah.
Perfect. Any advice for small business owners and how they can also take advantage of deductions? That may be
small business owners, let's say, for example, taxi drivers or small, even accountants, Uber drivers, they should keep their expenses in proper format. For example, vehicle. When they purchase their vehicle, they can use depreciation each year.
Would that be CCA?
That
Capital
would be
cost
CPA,
allowance?
capital cost allowance. So they should give the documents when they bought the car, how much they paid, which date was it, their accountant. Keep all your valid gas bills for your fuel expenses.
Is it better to submit the gas receipts or the kilometers driven?
You can also submit your kilometers driven, but this is also available for employees. Certain employers provide certain car benefits to their employees, which is a separate topic. Like if you drive 5,000 kilometers,
Right.
they give some, I think, 52 cents or something, and after that is 48 cents.
So you can submit both the gas receipts
The
and the
government will not
kilometers as
ask
well?
you anything these days, because everything is filed electronically.
Okay.
But this is your responsibility to keep your bills for 6 years minimum,
Okay.
because government can go back up to 6 years to ask you certain documents, because everything is filed electronically these days. So no bills in reality go to the government. Whatever is declared goes to them, and people think like we can fake it, but no. When you're audited, you have to provide all your documents.
Okay.
So, for example, maintenance bills for your car, repair bills.
And those can be scanned and digital.
You can scan them and keep it digital.
Perfect.
Yes.
Okay.
So try to pay it from your checking account or Visa account, so that you have valid proof.
Right.
And all other, like whatever you think is eligible expense, you can always Google or go to CRA website and keep those bills handy.
That's true.
Office expenses, let's say you bought a computer for your work, you bought a printer, you bought small furniture for your home office. When we talk about home office, you can say that, okay, 20% of the space in my house I use for home office. So all the valid expenses of that house, 20% of it you can claim as a valid expense. For example, heat and electricity. Yes, 20% of my space is used for the business.
And I'm thinking about capital gains.
Mhm.
It's probably a bigger topic. We don't have to go that deep into it, but I've heard that if out of the interest that I pay on the mortgage, now I deduct the 20%.
Mhm.
Well, usually if you sell your house where you live,
Right,
you pay zero capital gains because it's your residency.
right,
But if you start deducting for years,
Yeah.
let's say 20% because
Right.
you're using an office
for
space there,
business, yes,
you have to pay, I guess,
Capital
20%
Yes.
for capital gains because you deducted from the interest rates of the mortgage.
right.
Okay.
So for that 80%, you will not pay any taxes because this was your first house and you sold.
Right.
So under principal residence exemption, you will not pay taxes on 80%. But the 20% that you are declaring to the government each year as your business, let's say,
You have to pay it.
you have to pay on 10% of that.
Yeah,
Because
because
50%
it's
is exempt,
50%,
so
correct.
50% is exempt. So taxable capital gain is on 50%.
Right. So if you sold it and based on the price you bought the house for and you made a $500,000 profit,
Right,
then you have to pay 20%. Out of the 20 is 100,000, you
Yeah.
pay capital gains on the 50,000.
50%, right.
Okay, that's not bad.
That's not bad, yes.
Okay. That's a huge
Civil law.
benefit. That's
Yes.
very important to know. Okay.
Right.
So, Gurwinder,
Yes.
any further recommendations?
Recommendations, a basic recommendation is keep your paperwork organized. Keep it organized. Open couple of folders. You can label your documents. These are my car expenses. These are my telephone expenses. My hydro expenses. So keep them organized. And when the time comes, contact your accountant, and they will help you file your taxes.
That's very good.
Yeah.
That's good.
Don't stress out. And don't try to avoid taxes. You can minimize them, but do it legally, because once you're audited, it's very bad.
Once you're audited once, they're going to be on top of you every year.
Of course, once you're audited once, they can go back a couple of years. And not only that, in the future, each year they can bother you because they know this person is fishy.
It's fishy, right. But at the same time, people are afraid of maybe making a mistake or, let's say, abusing their privileges.
Right,
But I personally tell people, well, the first thing is you're not going to go to jail.
right,
The first thing CRA is going to be or they're going to be like, no, you owe me, pay me,
yeah.
right? And you can also agree to payment.
You can talking about the jail. If you really avoided big taxes,
Like big taxes.
you can actually end up in jail too.
But that would not be the first step.
It will not be the first.
The first step is to pay.
Right. First step is to pay. Yes.
And then they're going to be on top of you
Right.
after that every
Yes.
single year.
Yes.
Good. Gurwinder, are you still accepting clients?
Yes, we are always accepting new clients. All they have to call is call us, make appointment, and to drop their taxes, they don't have to take any appointment. We are open almost 7 days now in the tax season. So they can come in the weekdays between 9:30 till 6:30, and in the weekends between 10 to 4. They can come, drop their documents. If we are missing something, we will call them. And
so you're open 7 days, basically from now till May?
Now till May, even June, because June will be the taxation for corporations.
Okay.
June 30th for the people with corporations with December 31st deadline. We have until 6 months to file their taxes.
That's true.
So, yes, we are pretty much open.
And now that you're talking about corporations and other type of businesses, we are at some point in time, hopefully before the tax season ends, we're going to have another interview and get deeper into
can give more,
corporations and all the
suggestions.
businesses and all
Right.
the suggestions for sure. I'm going to make sure also as well to add your details
Sure.
on how people can contact you in the description below.
Yes.
And it doesn't matter the nationality. You don't have to be Indian, Ukrainian, Dominican. If you need tax advice, you can come to Gurwinder in his office.
We have clients all over Canada, by the way.
Oh yeah,
Because
okay.
everything, because of internet and social media, everything is so convenient these days. We have clients from British Columbia. We have clients from Ontario, Saskatchewan, Winnipeg. Everywhere we have clients. So all they do is they send their documents electronically to us. We file them. We send them for signatures also. We take signatures electronically, and everything is so convenient.
That's good. And we're in Quebec. And Quebec is a little bit different because we have the two taxes,
Right.
but the other provinces usually just follow the federal tax.
Taxes, right.
So it's easier for the other
It's
provinces.
easier for other provinces, right.
Good, very good. Well, thank you for your time, and I'm looking forward to interviewing you
Thank you,
again.
Mr. Robinson. It was a pleasure. Thank you for having me.
Thank you.
Thank you.
Well, subscribe to the channel if you haven't done it for more interesting interviews like this one. Until next time, ciao.
This is Immigrant Podcast with Robinson.